It's good to have you back with us. Let's begin with the jobless claims this morning. 209,000. They were looking for 215. I noticed the Treasuries coming off a little bit. The indices continue to hold near the highs from yesterday. Not a lot of reaction to this number. I'd imagine that's what could have been expected for the most part, considering the week we've had.
Yeah, that is definitely well within the range of plus or minus.
Okay.
So, like you said, Treasuries came off just a little bit here. I expect that they'll firm up again probably later this morning, and then all eyes will be on tomorrow's numbers. I think we get PPI out, right?
So, Scott, one thing that we're focused on here right now is the dollar, especially with some of the recent activity, the concern related to rates, which have been just plummeting, and tied to the yuan and some of the other concerns related to trade. Do you think that we should continue to expect this type of volatility in the dollar, and at least until some of this dust settles and we get some sort of return to normal kind of activity?
Yeah, so that return to normal, we haven't seen that in quite a while. But no, I agree with you. The volatility is going to persist, at least in the short run. Short run in my book probably meaning the next 4 to 6 weeks or so, as we're really almost on a daily, if not minute by minute or hour by hour kind of watch on what the next move may be from President Trump, from the Fed, and from China. Let alone all of the other central banks in the world that are, pretty much acting to help support their economies.
So, yeah, certainly a lot of focus on the news recently. Let's talk a little bit about the yuan and some of the activity that we saw this week, Scott, because I'm wondering if the move below the 7 handle, which attracted so much attention, if you felt like this was, well, obviously a very aggressive, stance from the Chinese to do so, but the fact that it firmed up and that they fixed it higher shortly thereafter in reaction to some of the comments from the president and the U.S. Treasury Department. Scott, talk to us, because in theory, I'm wondering basically, do you think this was a one and done type event, or do you think that there's potential for more to come here?
I don't think it was one and done. I do think it was the Chinese trying to test the waters and see not only how global markets would react, but how President Trump would react. And unfortunately, Ben, we've gotten out of the realm of fundamentals and out of true economics and more into a poker playing game. And the market doesn't like that. And that is why that leads to uncertainty, and that is why we are going to continue to see this volatility in the short run.
Noted. Let's talk a little bit about the EU, the economic bulletin. It's out. It basically echoed some of the sentiment that we've been talking about for weeks. You and I, Scott, basically, they said that the drop in global services output PMI in the second quarter increases the risk of more broad-based deterioration in the global growth outlook. They cited heightened trade tensions continuing and how global inflation decreased in May. They said economic expansion in the United States remains solid, but the pace of growth is likely to decelerate. I'm wondering where things stand. I mean, again, kind of echoing earlier comments, but yet, interestingly enough, the euro didn't really decline much on the news. Maybe it's because they had some favorable comments about employment numbers as well.
Yeah, I think that really offset it. And you look at all of that news, and the bottom line, though, is, Ben, the closer and closer we get to Brexit or the hard Brexit, that's where the uncertainty, that is where the volatility is going to continue. So right now, the euro is a little bit in a holding pattern here, but it sure looks like 8 weeks from now or 10 weeks, whatever it is, things could unravel even further.
Yeah, a lot of focus on Brexit, the upcoming, and the impact that that's had on the euro. But let's also talk about the impact that the unexpected 50 basis point rate cut from the RBNZ had on the markets yesterday on the currencies. They're firming up some off those lower levels, but that was a bit of a surprise.
It was a bit of surprise, and the Bank of New Zealand dropped rates here, and their currency has been lower for the last 2 weeks or so.
Yeah.
Like you said, it's just firming up, and that's all as a result to what's going on with trade tension and China devaluating their yuan, because we know that New Zealand and Australia are so tied, so closely tied to what happens in China. They really had no other resort than to do that.
Yeah, and while it might have been a bit of a surprise to see them lower by half a point, I think they were expecting a quarter point cut. Scott, no real surprise to see the yen and the Swiss franc benefit from some of the uncertainty that you had mentioned a minute ago and some of the turmoil that comes in associated with Chinese devaluating their currency and some of the other economic concerns that we've been working through.
Well, those are two currencies that are the low-hanging fruit that people run to as a safe haven, that people run to as a hedge. So,
Yeah.
you look at the Swiss bank and you look at the yen here, and that's why you're seeing that appreciation. I think that's going to stem a little bit also. I think that appreciation is going to come down a little bit as well. Nonetheless, though, you have the Swiss franc, you have the yen, and you have the dollar, and I'm not sure where else you go, Ben, in terms of global currencies as to where you run to, as to where people are going to, deposit their assets, because all the rest of the major global currencies that we follow here, they're all very, very weak and getting weaker.
Sure are. Scott, one more question in terms of currencies. The Canadian dollar, you mentioned in your notes that the loonie looks strong. Even though it's down almost 2% on the month, it's up 3% versus the dollar on the year. Recently saw the Bank of Canada leave rates unchanged. What do you have your eye on in terms of the 6C?
So I should have mentioned Canada. That's the one that their currency is not really getting weaker. So I apologize for that. But yeah, all systems are go there. And once we got the new accord pretty much finalized with the United States, Mexico, Canada, and then some of the oil issues that have been going on here, Canada's actually rolling around very well. In fact, if there's one economy in the world that you can say is maybe doing better than the United States, it's Canada. And that's why their loonie has been up 3% versus a very, very strong dollar this year.